Welcome to the New York Business Leaders Podcast, presented by the Coyle Group. We interview the most interesting and influential business leaders in New York and hear their stories of success, challenges, and lessons learned while building their businesses and personal brands. New episodes drop weekly, so please be sure to subscribe to get updates in your favorite stream. Without further delay, here's your host of the New York Business Leaders Podcast, Gordon Coyle.
Welcome back to the New York Business Leaders Podcast. I'm your host, Gordon Coyle, and today I welcome my friend Bill Minoff to the show. Bill's a CPA, and his story is interesting and probably pretty similar to a lot of professionals who worked their entire careers in New York City, and then during the pandemic decided to go out on their own. We cover that transition and how that went for Bill, as well as conversations around his tax practice, his exercise routines, and what life working from home is like these days. In the past couple of weeks, I've had listeners and watchers reach out to me to schedule time to be on the show, which is great. I really appreciate those calls, and I encourage you to contact me if you have an interesting story that you'd like to share in this podcast. Drop me an email, and let's find time to chat. My email address is in the show notes and in the description box below. As always, thanks for listening or watching this show. Don't forget to rate it or to give it a thumbs up, and as always, please subscribe. Now, on to the show. Hey everyone, I'm Gordon Coyle. Welcome to the New York Business Leaders Podcast. Today I've got Bill Minoff, who actually lives here in New City, the town that I live and work in. But before having his office location here in New City, he was a New York City CPA, and we're going to talk about his practice, how he transitioned from big firm to solo practitioner. I don't want to steal too much thunder. So right now I'm going to ask Bill, welcome Bill, but I'm going to ask you if you could give us a short intro on who you are and what your practice is about.
Thank you, Gordon. My name is William Minoff. I launched my solo tax practice in January of 2021 after spending the lion's share of my career working with high net worth individuals and companies in a variety of industries, all in New York City. So this was a huge transition, and I'm thoroughly enjoying the change that has taken place since the onset of the pandemic.
So it was not only a huge career change, but you did it right at the beginning of the pandemic, right?
So what happened was once the pandemic hit, at that time I was the tax director for mid-sized CPA firm based in New York, and providing services principally to a large international art gallery, as well as many other clients in a variety of industries. So I was able to easily transition to remote work because I really had a good setup in my home office, which I created several years before. So for me, it was a very, very easy transition, going from being in the office 5 days a week to working from home exclusively at that point in March of 2020. And that really was the beginning of a change of my lifestyle. Certainly it ended up for the better.
That's great. What was the trigger? What led you to starting your own practice from, going from this big firm to a solo? What was the big thing that made you do that?
So I joined this firm, this mid-sized firm, after as a result of a merger with another firm that happened several years earlier. So all of us went in with 2-year employment agreements, myself included, and at the end of the 2-year period, which ended in October of 2020, the decision was made to discontinue our relationship. And at that point, I made the decision that it was a good opportunity for me to start my own firm as a solo practitioner, given my experience, years of experience serving high net worth individuals, businesses, and families. And during that time, I had brought in a number of clients to the firm. So from the period of time of the ending of our relationship, I negotiated the ability to provide service to the clients that I brought into the firm, and most of them did come with me. And that's how it started. It seemed like a perfect opportunity at the time.
Yeah, it sounds like it. That you didn't have to start from an absolute, scratch position.
I had some built-in advantages that young solo practitioners didn't have. I had a significant experience working for a closely held media company for 25 years, and that's really serves as the foundation of my practice, because my practice consists primarily of many of those retired executives who I had a relationship with, as well as the law firm partners and managing partners, many of whom I worked with very closely when I was associated with the media company. So it was a natural progression, as I saw it in my career, at the perfect time. And I had the office already set up, so it was really of almost a seamless transition, especially with respect to my clients.
That's great. So you've been doing it now for a year and a half, almost a year and 3/4. Can you?
Well, actually, technically, I launched my practice in January of 2021.
Oh,
so 2021. It's not quite a year.
So you're not quite a year into it. So
yes.
Can you give us some of the challenges that you've faced in this sort of startup phase of your new career and new lifestyle, so to speak?
So I think that the number one challenge of being a solo practitioner is the fact that there's so much to know that you can't know, and you need to rely on other people to support you. When you're part of a larger organization, you kind of take that for granted, especially so on the administrative side. So I've always had a significant amount of administrative support in serving my clients, and that's now no longer the case. Also, and this really has less to do with my own practice than just the fact that working remotely, you don't have the ability to impromptu talk to a fellow practitioner about an issue you might be facing. You really have to plan that out in advance and then schedule a conference or a meeting. That's more of a function of working remotely. But I would say, though, the biggest issue is the inability to have all the answers at your disposal. It's just impossible, and there's so many things nipping at you. I think the key point is to know what your focus is, know who your clients should be based on your strengths, and focus on those, and focus on your network. I've also been blessed to have a very robust network, and as a result, I've gotten a fair number of referrals, and some has resulted in new business, which has been extremely gratifying.
That's great. And I think that your advice on focusing on the things that you do best and working within your wheelhouse applies to just about every business owner. It's not just CPAs that should kind of stay in their lane and do what they do best, but it's everybody. And I kind of find that for myself when I focus on the things that I'm really good at, it's a lot easier than trying to reinvent the wheel to do something that you've never really been good at. So good advice there.
In the CPA profession, even within tax, there are so many subspecialties that you want to be very careful about the practice areas you get involved in, because unless you either have the education or the experience, it can be challenging and difficult to master areas, especially when you have a lot of experience overall. as I do. And, my objective is to parlay my experience to the benefit of my clients, in addition to trying to support everyone in my network in any way I can.
Mm-hmm. Mm-hmm. So there's a lot of solo CPAs out there. How do you differentiate yourself from the competition?
That's a really good question. I would say the number one way I differentiate myself from other practitioners is with my very unique experience, which has provided me with a skill set that not that many people have. I view myself as my client's trusted tax advisor. So I have a broad background in a variety of tax matters that I've gotten, number one, through my education. I have a master's in taxation, and I build on that continuously through continuous learning and through CPE in tax, as well as reading on my own. And really, when you're a tax practitioner, there's a lot of demands to stay current in a variety in many areas, and I make every effort to do that on behalf of my clients. So that's not all practitioners do that. I'm not looking to do non-tax work, including bookkeeping and anything that's not tax related. I really enjoy doing the tax advisory and planning type of work, but quite frankly, the meat and potatoes of my practice is tax compliance, albeit for high net worth individuals, families, business owners, and the like. And I've gotten some great referrals particularly through my association with my former closely held media company, that has afforded me, some new business, which has been great.
That's great. I just kind of echo your comments on continuous learning. I think that's the strength that every professional brings to their clients. And if you're not always learning and expanding your knowledge base, you're really not doing anything great for your clients in every profession.
That's true. That's true. Well, in accounting, I think it applies to insurance. Any licensed professional, they have a requirement under state law, in this case, New York, where I'm licensed, to have a minimum number of continuing professional education credits every year. But I'm not motivated by that. I'm motivated by my curiosity in subject matter, and also in helping my clients and potentially future clients.
So, Bill, along the same lines, you talked a little bit about your network that's been able to bring some business opportunities to you, which is great. How else have you promoted your new practice, especially during the last year of COVID? You're not out, shaking hands a lot. How else have you done that as a startup?
So my business model really is based on developing business relationships as opposed to as opposed to transactional tax professional relationships. I'm looking for a specific type of client. So I'm not, again, it's not my business model is not volume based, unlike many practitioners who are looking to get as many clients as they can. I'm not looking for that. I'm looking for high quality clients that are a good fit for what I do best. So that really infers having a great network, which I do, that's looking out for what I do and understanding what I do, and anyone who they come across who they think would be a good fit, very often is going to be a referral. It doesn't necessarily lead to new business, but it's really about the thought that I really appreciate. Anyone who's thinking about me, and in addition to helping someone else in their network, if they have a tax issue that they think I could be quite helpful to them on. It's really about networking, and I'm always cognizant of trying to help everyone in my network in any way I can. So it goes both ways.
For sure, for sure. Now, you've used the word tax, which a lot of accountants do and a lot of professionals do. But for those that don't really understand what's within the silo of tax accounting, can you give us a thumbnail on what you're really specifically talking about there?
Sure, sure. So tax obviously can encompasses a pretty wide area of accounting. And one of the things I like to do, I I would distinguish myself from a tax attorney in the following ways. I'm not an attorney. I'm a CPA, and I do have the educational background that a tax attorney does have, or who one who has an LLM in tax, because the master's program is equivalent to the LLM, except that I didn't go through and become an attorney. But essentially, what I do, uh, that an attorney will, I mean, what an attorney will do that I won't do is draft documents. So I don't draft any documents, be it estate planning documents or documents for entities and the like. I also won't represent clients in any court, even though I'm technically allowed to. But other than that, I'm involved in as far as tax advisory, planning. So anyone, particularly executives, and in addition to other types of situations. But it's really about also, in addition to the advisory, the planning, and compliance, particularly on the income tax side, not just for the individuals, any entities that they're associated with. I'm happy to handle their tax compliance, but be it for fiduciaries, which are trusts or estates. I have a lot of experience in the estate planning area, so I'm a professional who works best collaboratively with other professionals, especially attorneys who I've worked with for many years, in addition to wealth advisors, insurance advisors, and others. So I believe in the collaborative or team approach, as opposed to the silo approach, where we could all work together to for the betterment of our shared client. That's not something that every professional shares. Many still work in a silo approach where nobody talks to each other, and I think you're leaving. You're not working to the best. You're not serving your client to their maximum unless professionals can speak to each other, because you can't know everything.
Yeah, I would agree. And I think that that works for a lot of different professions as well, the collaborative approach. So, Bill, let me ask you, what sorts of challenges do your clients face that keep them up at night that you help them with? Maybe that also can kind of give us a little clarification on tax.
Sure, sure, sure. Well, one matter that I'm working on now with another CPA, and I collaborate with other professionals. We have a client that is a founder of a technology company, and there's a tax benefit that is available to them if they meet certain requirements, and if the requirements are met, the gain on the sale of this security could be excluded from capital gains tax. The amount is up to is the greater of $10 million, or 10 times the basis of the stock. So it's a provision that's been around for quite some time, but it's getting a little more play these days, given the changes in the tax law from the Tax Cuts and Jobs Act of 2017, and the specter of any Biden tax increases that may come to pass this year. So think of the benefit of being a founder and having the ability to exclude millions of dollars of gain that would otherwise be subject to tax. So that's one matter. I have another client who is looking to create he's got a process where he's looking to create in the financial services industry, looking to create a new company. So one of the tax planning advice that I was working on with him is the possibility of having a self-directed retirement plan, purchase the shares of that company. And the benefit of that is if it goes up substantially, that gain would be excluded from income tax ever. So if you have a company that grows in value substantially, then that increase in value will never be subject to tax. Now, the only downside is that if that person dies with the stock in their retirement plan, it will be subject to estate tax. So as a real life example, Peter Thiel, who is the founder of PayPal, initiated such a tax planning idea, which worked pretty well with PayPal. He's got a Roth retirement account in excess of 10 billion.
Not a bad payday.
So another good example is I have a new client that came to me through my associations with the closely held media company, who has been a mid-level executive with a New York-based company, and from the outset, he's been with the company for about 8 years. He worked out of his Houston, Texas residence, and because of the law in New York has what's called a they require companies to withhold tax on their non-resident employees if they're working out of their homes for their convenience, as opposed to the convenience of the employer. So it's called the convenience of the employer rule. So I was able to help this client manage that issue, and we were able to successfully rebut the company's attempt to withhold New York tax on my client. So those are a few examples of some of the things that I work on to help my clients. I'm currently working with a music executive who recently came upon a liquidation event, and helping her manage the proceeds and optimize the taxation of that event. In addition to that, working with her spouse, a same-sex spouse, who happens to be a non-resident alien of the United States. So managing that issue and handling their tax compliance on their behalf. So there are a few matters there. So those are that provides a flavor. One additional matter, a longtime client of mine, relocating from New York to Florida and managing that exposure for him and with him. So one of the things with my clients is that we all collaborate together. It's not like the client says, this is it, handle it, Bill. We work together, and I firmly believe that as a team, we need to. There's a responsibility on both the service provider and the client to be as responsive as possible. I mean, it's always thought of that it's up to the service provider to be responsive, but it's equally important for the client to be responsive to the service provider's requests, because he or she's acting on behalf of the client.
Right. So you mentioned two situations, one with Texas and one with Florida. Both of those states are considerably lower to no tax states compared to New York, correct?
Correct.
And are you seeing a big movement or migration of your clients to lower tax states, especially with COVID now?
So yeah, that's an interesting point. What I've seen, I don't think I've gotten more questions than clients and some of my former clients when I was with the CPA firm, asking the question, because they're currently residing in maybe secondary residences outside of their New York City domicile. And now there's a difference between domicile and residence, which I don't want to really get into here, but essentially the question that comes up very often is somebody who is a longtime New York City resident or even New York State resident, currently living throughout the pandemic elsewhere. And the question is invariably, can they take the position that they're not New York State or city residents? And more often than not, the answer is no. The problem in this area, there's so much misinformation and mischaracterization. If you're domiciled in New York, you need to be able to prove by what's called clear and convincing evidence that you've terminated your domicile in New York and established that domicile in another jurisdiction, say Florida or some other jurisdiction. It's not a matter of just spending more time outside New York. You have to be able to demonstrate you've actually moved. There are some rules that would enable you to claim not to be a resident for a particular year if you're not in New York for 30 days or more. And there's another rule with respect to international assignments. But other than that, it's very difficult if you're a New York resident to no longer be a New York resident unless you actually take the appropriate steps. And even if you take the appropriate steps, if you profile as a taxpayer who has a healthy 6-figure or more income, you should be prepared for a fight. And I have a lot of experience in dealing with residency matters, particularly with New York. New York is by far the most aggressive jurisdiction.
That's what I was just going to say. The long arm of the New York tax department they're not going to let you move out of state too easily unless you can really prove it, I guess is the bottom line.
That's correct.
Yeah.
That's correct.
So
and there are a bunch of criteria that are available that you have to follow in order to have a fighting chance.
Yeah, yeah. So I want to shift gears a little bit. You and I had talked about our exercise regimes and how important they are to us in our lives. I wanted to kind of ask you if you could share with us some of what you do and how exercise is kind of giving you a little bit more work-life balance, especially without the commuting that you used to do compared to today. So would you mind sharing some of that with us?
Sure. I think it'd be helpful to, understand I the anal individual that I am. I was, before the pandemic, I was leaving my house every morning at 5:30 to get to the gym at 6, where I used to work out before they kicked us out when the pandemic started. And at the gym, I'm an avid swimmer, so I swim pretty much up to 6 days a week, and I alternate that with an exercise regimen that I would do for about 30 to 50 minutes prior to that. Once the pandemic hit, there was a period of time that I had no ability to swim, and that was the first time I was not able to swim in 40 years. It was very, very challenging. I don't feel sorry for myself. It's just that it was because of the pandemic, nothing was open. You couldn't go anywhere. Gyms were obviously closed. So I started embarking on something I had never done before, walking. Back in the day, I played sports, mostly, recreationally, mostly basketball growing up, as well as hockey and other sports. I started walking around May of 2020, and now to this point, I've now incorporated that as a part of my exercise regimen every other day. So I joined the gym locally Well, when I started swimming outdoors first, locally, and then in October I joined a gym close by, about 20 minutes away from my house, that has both an indoor lap pool as well as an outdoor lap pool, and I really relish swimming outside. So I swim pretty much every other morning at about 6 a.m., about a mile a time. It takes me about 45 to 50 minutes. So I alternate doing that with a 20 to 25 minute exercise regimen in my house on the other days. And then I follow that up with a 3-mile walk. And to me, that is essential for me to start the day, regardless of whether I'm working or doing something else, because it really catapults my day. I'm much more alert and relaxed as well. So I swear by a morning workout routine, and it really matters less what you do. It matters more that whatever it is you do consistently.
Yeah, I would agree. And I would imagine that not having to finish your workout routine and then jump on a train to Grand Central is a pretty good feeling today.
No doubt. It's the fact that I've gotten back about 10 hours a week, 5 days a week. That's all part of it, but it's only a small part. The fact of not having to account for my time to anyone other than my clients and of course my family has been a revelation, so to speak, for me. I'm thoroughly enjoying this time in my life, notwithstanding the brutalities brought on by the pandemic.
Yep. Bill, it's been a great conversation. I really appreciate you coming on the show. Are there any last comments that you'd like to make?
Sure. If anyone would like to reach me for any reason, if they have a tax question, feel free to contact me at my email address at william.minoff@gmail.com or via LinkedIn at linkedin.com/Bill Minoff by messaging me. Gordon, I greatly appreciated the opportunity to speak with you today.
That's great. And I'll also put your contact info in the show notes so it's readily available in the podcast as well as on YouTube. So if anybody wants to reach you, they can do that as well. Again, Bill, thanks for joining us today. And for anybody who's listening or watching this podcast, if you have an interesting story that you'd like to talk to us about on the New York Business Leaders Podcast, give me a call, drop me an email. My contact info will also be in the show notes. And if you haven't subscribed to this show, please do so and rate it so your friends and colleagues can find it on Apple iTunes and podcasts and wherever else you listen to podcasts. Thanks very much again. I'm Gordon Coyle for the New York Business Leaders Podcast. Be well.
That's it for this week's episode of the New York Business Leaders Podcast. Be sure to subscribe so you don't miss next week's episode. In the meantime, find more interviews and resources at nybusinessleaders.com.